Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for March 28th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 337. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today I've arranged for Sunny Harris to join us. You should be seeing her screen right now. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks a lot, David, and welcome everybody to this Monday edition of Timing Research. And we've got a lot to talk about because we've had a very big run in the stock market. And the question is it going to continue, or are we going to fade a little bit here? So we're going to get into a lot of different things. And the interest rates have been jumping through the roof. So we'll talk about that, I guess, a little bit as well. But before we get started, Sunny Harris, you had a long, distinguished history here in the educational markets. A little background on yourself for the people who are not familiar, and a little bit about what you're doing at the company.
Well, educator, author, trader. I've been a full-time trader for 41 years, almost before history began in trading. Actually, I came into trading the year before the S&P 500 started trading futures contracts.
I thought you came in when they did the chalkboard and they had the eraser, you know.
Thanks a lot. Not quite. But they had a ticker tape. So let's see. I'm a mathematician. I have a website, moneymentor.com, where I put everything that I know. So I just keep track of all the things I want to know on my own website and make it accessible for everybody else. I do a free Sunday night newsletter called The Sunny Side of the Street. And I have a podcast called The Sunny Harris Show.
And you have the Sunny bands, which we're going to get into later in the broadcast too, right?
Which you can see. Are you sharing the screen yet?
I believe so. Yep. We've got bands
right
up there. Yeah, we got bands up there as we speak. Well, let's start out with our basic questions, then we'll get into the meat and potatoes. The questions on Monday morning are: we started the day on the S&P cash index today. Let me just double check that and see. So looks like we opened on Monday here at 45.50. So from 45.50 on the cash index, and you use the E-mini, so it's going to be a little bit about the same. Where do you think we're going from that neighborhood? Are we going to be higher or lower by Friday? And what's your confidence level?
On the E-mini?
Yeah, well, on the E-mini, and I'm using the SPX cash, but I think it's around the same. What do you open, 45.50 area on the E-mini today?
Yeah, we're at 45.26 right now as we speak. And if you watch here, I draw horizontal lines on all kinds of things, and I call them attractors.
Sure.
It's places where price tends to be attracted because it's previous prices. And I call it the preponderance of price. You can see across here, we've got this head and shoulders pattern that went down like that. And looks to me like it's going to at least test this orange line, which is at 45.68.
Okay.
So that might give it some pause. We've probably got a 1 wave here. That's a 3. We can expect a 4 correction, and then 5 on up higher.
Right. So right now you think by Friday we could be going up towards the 45.70?
What's today? Monday?
Yeah.
45.68 for sure.
Okay. So you would say it's probably going to be going higher by the end of the week, and your confidence level on that is?
Well, I'm expecting in the next 2 days to hit that orange line.
Okay.
So my confidence level says that it's going to have a 4 wave back down correction before it goes on up.
I got you. So it could be a deal where we rally for a day or two, and then by the end of the week, we might start fading off, doing a little bit of a corrective activity.
That's what I'm thinking.
I got you. Now, I know you do a lot of things on a very short-term basis, but you also have long-term holds on stuff as well.
I do.
Right. But if you were going to say outside of you already went over a little bit of the technical. Are you looking at anything fundamental like the jobs report Friday or the OPEC meeting or something like that? Or are those not really on your radar too much?
Everything I know is in price.
I got
I'm
you.
just looking at those numbers.
Yeah. And of course, your mathematical background will be more interested in following the numbers than some report or opinion.
Well, it's basically, I can't help myself.
Right. Well, again, there's a long-term theory that these prices are already putting in quite a bit of what is known. And outside of the out of left field event, you're going to have what you have. You know what I mean?
Well, math is the language of God, right?
Right. Right. It's all math at the end of the day, right?
That's right.
Well, anyway, as far as the technicals right now, we went up a little bit, then we're down a little bit right now. And you're thinking that this chop could get a little bit of a rally. And then basically something could occur later in the week to cool things off a little bit.
Yes, I think so.
Yeah. With regards, now this is on a relatively short-term basis. Do you have any kind of a longer term feeling on what's going
Well,
on?
this is a daily chart, so
Oh,
to me,
okay.
that's really long term.
That is long term.
Yeah, that, if you want to see what I'm looking at all day, it's this one.
Yeah. Okay.
That's my chart. That's a 5-minute chart.
So we got a little bit of a buy area down there at 45.10 today, and a sell area up around 45.45.
Mm-hmm.
And so right now it's
Yeah.
kind of smack in the middle.
Yeah, I think it's this. This is what I call the upper inner band, this teal line on the upper side of my sunny bands.
Right.
And it has touched that. You can see that little candle touch that and receded. The DMA, which is the gold and purple lines in the middle, are fairly flat, which says to me that that's going to be choppy for a few 5 minutes.
Yeah, on a macro basis, some people are thinking we might enter into a trading range of 4,600 on the upside, 4,400 on the downside, and they could go choppy here in the month of April as we wait for earnings and we wait to see what the Fed's going to do and the CPI number and all these things that are going to be coming out, right?
That would make sense.
Yeah. With regards to the lines up here, there's a lot of bands here. Can we clarify what each band is? Because we got two rather thicker green bands.
Mhm.
Is that the main sunny bands?
That's the outer band. The outer bands are both thicker and green. So there's the upper outer and the lower outer. The teal, which are thinner, are inner bands. So that's the lower inner and the upper inner. These are the dynamic moving average, which is in the center, the purple and gold, is a proprietary mathematical formula that I came up with to avoid whipsaw, because I found out very early on that most moving averages whipsaw, and you can make a lot of money in a trend and lose a lot of money in a sideways period.
Yeah, yeah. In other
Just
words,
give
the
it all
moving
back.
averages or following the trend
Mhm.
becomes very costly when you go into a choppy environment because they start violating up and down. And
Right.
if you do that 10 times in a row, you could go through quite a bit of money.
Right. So that's what I developed this moving average for. It stays out of the way of chop and does not change colors. And you can see here, it's stayed gold, 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 gold. On the bottom, it says who's on top. So I can see that by these gold dots, the gold line is on top this entire period, which is.
So if the gold
here,
line is on top, is that meaning it's
that's bullish?
Oh, it's bullish. Okay.
Gold line on top is bullish. Purple line on top is bearish.
Gotcha.
So you can read who's on top at the bottom and see which line's on top, even when they're close together.
So right now we do have a gold over purple deal, albeit it's a little bit away from it, but you certainly got a pretty good signal there at 43.50.
Yeah, right in here, we got a signal to go long.
Yeah.
But you see these vertical bars at the bottom?
Okay, what are they?
They are my dynamic moving average histogram. They measure the distance between the purple and gold DMA lines. And you can see that right here, we got a signal to go long. That's a pretty good place.
Yeah. Now, the fact is we have a signal to go long right here, but the upper band is being touched, which coincides with your concept of we may have a reversion back towards the mean a bit.
Absolutely. That's the way I read it.
I got you. And so that would be something of a caution flag on a short-term basis, or a place to take some type of action. And then, of course, if that gets above that band, then the bands change.
Yeah, they'll start turning up. You can see that the DMA is already turned up and crossed over. Gold's on top down here at the bottom.
Right.
So that's a bullish signal. And then you see it crosses over there. And goals on top. So that's saying to me that we're going to have more upside action, but we have to penetrate this orange horizontal line
Right.
and the upper band. And again, I'm thinking it's going to take a little 4-wave down, make a little bit of a correction, and then go on up.
Because you do have a February high of about 4,600 on the S&P. And so the high in
February
February,
high,
it was a
Here?
February high, correct?
right there.
Yeah, isn't that about 4,600?
Yes, it is.
Yeah. So
That's right at that orange line.
right. So that could be a coincidental resistance point because it was a high point in February, and this is our first attempt to try to take it out. And it could be a situation where at the end of the quarter, sometimes you have window dressing, you had a options expiration, and you had a lot of short covering and sideline cash panicking back in. And that may subside a little bit in early April. And that
If I
might
spread
give,
this out,
Yeah.
look what you see.
Yeah.
It's right. It's just right there.
Yeah.
We got a little bitty red candle.
Yeah.
Showing me that there's some hesitance right here at this line.
Yeah. Yeah. And like I say, anyone who's been watching it, look at that rally. That rally is not a tiny rally.
No, it's a good rally.
It's a very
Good rally.
strong
That
rally.
was $14,000 on the E-mini rally right there.
Exactly.
For
And so
contract.
that's a pretty strong rally. And again, it's in an environment of the Fed taking away accommodation, and it's in an environment where inflation's running very high, but it's in an environment where corporate balance sheets and household balance sheets are in fantastic shape, and there is a lot of people who want to get out there and spend some money. The question is the cost of living going up so high to take away the discretionary spending? That's a big question right here.
That is a big question, but I don't see any slowdown of the spending right yet.
No, that's yeah.
In my sunny side of the street last night, I put a picture of the gas tank. Not the gas tank, the gas pump.
Yeah.
When I was filling up just the other day, $6 and I think it was 29 cents or something.
Is it really? It is over 6 in San Diego
California,
County.
it definitely is.
Wow. But again, they pumped it was a 35% jump in the money supply. It was a Fed balance sheet going up to 9 trillion. We've got the unemployment rate is at a record low in 12 states. And the amount of jobs out there are tremendous, and wages have increased, not as much as inflation, but it still has increased. So you do have a pretty good tug of war, and you got these earnings coming out right after the end of the month here. And, it could be a situation where the earnings shock people, and that could be the impetus you're talking about to really get going.
Yeah, I think it's going to come on up.
Because the yields have already gone up. I mean,
time.
I don't know why anyone would be worried about what the Fed's doing. The market has already done the Fed's job for about 10 hikes. Because we're at over 2.5% on the 5-year note.
But it wasn't that long ago that I thought 3% was low.
Yeah.
10 years or something ago, they had over my mortgage was over 3%. And I thought that's such a good mortgage.
Yeah.
There's nothing
But
wrong with
again,
3%.
now that rate going up is against a much higher asset price.
Mm-hmm.
So,
That's
again, when you're talking about those rates, the asset prices were not where they are. So that's something to factor in. But you'd have to admit that there's a lot of money running around, and there's a lot of people who want to spend it. And again, that could bode well for earnings. So these people that are looking for earnings to contract or something, they could get sticker shock when these guys start announcing their earnings.
Well, with higher prices, they should be earning more, shouldn't they?
Yeah. And it doesn't seem like a 2.5% 10-year is scaring anybody.
No. And we have an inverted yield curve right now.
Yeah. Well, that's because, the whole thing is so far behind. We're running at 8%. That's announced inflation. We all know it's probably 10 or 15%.
Right.
And with those kind of inflation rates, it's almost beyond the imagination that the Fed is still working at these quarter point hikes.
Yeah, they should go up a full point, in my opinion.
That'll
shock it. That would shock everybody.
Yeah, I don't know if it would shock it because we're already at 2.5 on the 5-year. We're already at 2.25 on the 2-year, 2.30 or 2.40 on the 2-year. So the short-term rates have already yields have already gone up. This 1/4 of a point seems like comedic,
Yeah, yeah.
So
Well,
I mean,
the treasuries and the bonds are they already have accounted for that inflation
they've already got whacked.
interest rate.
Yeah, they've already got whacked. So this is really a sell the rumor, buy the fact type deal.
Mhm.
Unless, now what do you think about the possibility of him going Volcker on us, which means that they're going to try to put the interest rates above the inflation rate or above the growth of the inflation rate?
Oh,
That
that'd
would
be
be,
shocking.
yeah, that would be something that's needed, and that something would occur in other time frames. But the likelihood of it happening in this time frame seems remote, right?
Yeah, I think they're worried about stagflation, to tell you the truth.
Although stagflation means you have a stagnating economy, and that's the last thing that looks like it's going on out there.
Well, that's true.
It looks like you've got not stagflation, you've got Zoomflation,
Mhm.
boomflation, a
Mhm.
booming economy and inflation. And I haven't heard anybody talk about boomflation.
I've never heard the term.
I know, because we've never seen it before, because we've never seen the Fed balance sheet at 9 trillion. We've never seen the money supply jump 40% almost in a year. So there's a lot of things we've never seen. And but I mean, if we start seeing GDP growth remaining extremely strong and earnings very strong and inflation staying high, that would be the moniker, wouldn't it?
It would be.
You
That'd
know?
be a good one. Why don't you trademark that?
Yeah. Because I don't think anybody really wants to see it, because if you see that, Lord knows what these interest rates could do.
Yeah.
Because when
Well,
you think of,
you mentioned how old I am.
Mhm.
I remember when the interest rate was 17 and 18%.
And that was when the last time inflation was at these levels.
Mm-hmm. True.
So I think it's a very
years.
very exciting time, because if they're going to play 1/4 point hikes and 1/2 point hikes, that's the green light that the stock market is running on.
Yeah, and I think that it's going to keep going up on that.
Yeah, because again, the stock market and the economy is not going to be stopped with the interest rates that they're talking about. It doesn't look like it anyway.
No, they need to go minimum 1/2 point next time.
Now, if the commodities were to peak, which is my view that they are doing that right as we speak, what would that do for the stock market, do you think? If we saw oil go from the 130 that it hit and go down towards $80, and we saw,
an interesting chart of crude here.
yeah,
Squeeze this up, you can see where I started. That's a Fibonacci fan. You see, I started it back here on this little COVID drop, and then some just flat period right there.
yeah,
Spread it back out. So you can see that line comes right up to where that price was. It's above it actually. And then again, this can act as an attractor. So it goes up there, comes down back below it, goes down to the lower fan, comes back up again, doesn't meet it, and back down. I think these attractors are magnetic fields for the markets. And it looks like oil's going to go on down to this bottom line, or at least to the lower inner band of the sunny bands.
yeah. And it's already taken off 7% today, and we didn't even have our coffee yet.
Oil?
So
Oil's
it's down 7.5%, and
$7.50.
Oh, well, isn't that a percent? 6.5%.
Oh, 7%. You're right. Minus 6.57.
Yeah, that's no joke, huh?
That's no joke.
Yeah.
And Tesla went screaming on up.
Well, they announced the split,
almost
and
8%.
people. Well, I think to be honest with you, stocks like Tesla are saying, listen, if you're going to go 1/4 point hikes, we're not going to discount future earnings very much, and so that's why they're jumping back on the interest rate sensitives, because the hikes that they're talking about, are a joke.
Well, Tesla also said they're going to do a stock split.
Yeah. I mean, obviously people jump on that too.
I didn't see how many shares.
Well, I think they're talking about another one where at least they go half price.
Yeah.
But
Well,
the other guys, Amazon and Google, got them coming up too.
20
So
for one.
if you're a stock split guy, you got to keep an eye on Google and Amazon and Tesla,
Yeah.
because it looks like they're all trying to do that. Although Tesla seems to be deferred until a meeting in September or something where it has to be approved.
Well, the Amazon one's coming in June.
Yeah. And
there's
Google
another-
and July 15.
Yeah. So look at that. We've got a trend line that goes down from the high on Tesla to the second high on Tesla, and it's hit that price exactly today.
Now, what would be kind of interesting to talk to you about is if the commodity sector might be hitting a high point. What do you think
What
of
commodities you want to look at?
well, we already looked at oil, and we've made a determination that it's possible that it could be rolling over. And if that was the case, why don't we look at CVX or HA or Devon, DVN? Both are very much way up. What do you think?
Well, we've got a little bit of a down today.
Mhm.
You see that gold's been on top for a long time, except this little blip of purple here,
Mhm.
which is that dip in price. Got a little dip there. I'm thinking that's going to come on down to my dynamic moving average right there in the center. And it goes down here, probably go on back up again.
Yeah, because it's still in a bullish
What are the-
situation,
what
but
is
then we
this?
could get a dip here. Huh?
What is this?
This is
Devon.
Devon Energy.
Oh,
Which,
energy.
as you
okay.
can see, it's gone from 25 to 65. So it's one of the more extended oil stocks. Halliburton would be another one that's gone up pretty good, HAL.
Yeah, same picture.
Mhm.
Same picture.
It's down 4% today.
Yeah.
So again,
Well,
so, obviously
yeah,
it's having some
4.29.
trouble at those levels. You know what I mean?
Mm-hmm.
And what about CVX? That's your Chevron, which has really gone up to the roof.
So that one doesn't seem to suffer as bad as the other two did.
No, it's not in the same business.
Mm,
The other ones are more looking for the energy. This one already got it.
yeah, but we've got a little hesitance right here. We go like this. You can see that trend line's holding it down.
Mhm. Let's turn over towards, so we got a little look at the energy, and we got a little bit of an idea that some of those stocks are getting their air taken out of them a little bit.
Let's
And
look
if
at this
the-
one 1 second here.
Sure. Exxon, sure. XOM.
All right, XOM. Oh, come on.
Yeah, we all have these things happen.
Technology. Yeah, that's back to the same picture again.
Yeah. All right. So I think we've established on the energy, there is some risk that, there could be some further pullback. What about on agriculture? Can you put up the future price as easy as a stock and look at soybeans?
Sure. Yeah, here I've got soybeans over there on the radar screen.
Uh-huh.
Let's look at this on a weekly. That to me, that looks like that's going higher, but it is rolling over. The last 1, 2, 3, last 4 bars have been kind of rollover.
That's on a weekly though.
That's a weekly,
Yeah,
yeah.
if you look at the daily, I'm sure it looks like a little bit, it's lost a little bit more steam than that.
Mm-hmm. It has. It's
Yeah.
about ready to touch the midline on my DMA. So
Yeah, and your purple
That-
showing up at the bottom. So purple means, get the
purple
raincoat
means
out,
it's
right?
been suggesting shorts from there.
There you
I
go.
always let price determine whether I'm taking any of these signals or not.
Yeah,
Like right at this line, it would have said to go short.
Yeah.
Oh, I'm not going short unless price tells me to. So there's one short opportunity and then out. Again, I think this is going to touch the DMA on that bar or the next one. So today or tomorrow, it'll probably touch the DMA. I'm guessing, looking at this, this touch right here, this touch right here, this touch right here. I'm guessing it's going to touch again and bounce some more.
yeah, it's possible. But like I say, the purple definitely is a warning sign, isn't it?
It has a warning sign. But
Now,
we still have a war in the Europe spread basket.
what about wheat?
Wheat.
Because that's the one where 40% of it or something comes out of Russia into Ukraine. But, that
Mhm.
looks like it might have had a blow off top.
Well, look at this flat DMA right here. and we're just churning right around that flat
Yeah.
BMA, back and forth, back and forth.
Yeah.
That's indecision. They don't know
That
what
is.
to do right now.
Well, and what about corn? Just to do the third amigo.
Same story, different
Sorry.
height.
Just
We
began the
went up and now
purple
it's
though,
just
huh? Just
turning again.
the purple just came on the board. Huh?
Just started. Yeah, just started. So that could be a, you know, that could be price going down easily.
So let's look at Archer Daniels Midland. ADM.
Oh, look at that go.
Yeah, it had a huge run, but
It had a huge run, and so they're banking on the commodities prices going
well, they're
higher.
agriculture all the way. You know what I mean?
Right.
Yeah. But there's no real indicator of that thing running out of steam yet.
No, not at all.
Yeah.
We've got
It's,
one vertical red bar right there. That's a warning sign. That always occurs before we get purple on top. That's my early entry signal. If price
so
went down
this would
any
be something
further,
this would be something you'd watch closely, and maybe, you know, be concerned about if it started to get any more weakness, huh?
well, that'd be a good time to go short, but it doesn't look like it's going to be a very profitable short trade, nevertheless.
No, I mean,
You see these dash lines
this is
here?
early in the game. If these things are hitting a peak, this is the early stages of that, if it's going to happen at all.
Right. Yes.
Yeah.
See this
What
dash
about
line right here? These are
mhm.
the 20 and 50 moving averages. You can see they're well above that.
Yeah, well, that's also if it is possibly getting to a high point, you know, reverting back to the mean is what the idea would be, right?
Right.
What about Mosaic? That's a big fertilizer guy.
What's the
MOS.
symbol for that?
MOS.
Looks good to me.
Yeah.
On every one of them, we've got this down bar for today.
Yeah.
Now, I haven't looked at the news about the Ukraine today, but I'm going to guess something happened.
Yeah. You know, sometimes people look at hedging when they've owned something for a long period of time and they've had huge runs, like the energy stocks, like the fertilizers, like the agricultural oriented stocks. And then they start looking, and then if their options familiar or options, you know, suitable or whatever, they could look towards some hedging tactics to protect some of those gains, that type of thing.
Mm-hmm.
And
or take profits.
Yeah,
that's
or take
always
profits.
a good thing to do. You
Yeah.
never go broke taking profits.
No, but if you're not going to take them, hedging them is not a bad alternative either.
Right.
You know, so
How do you hedge?
Well, you know, you can do the covered call writing, or you could do a collar strategy, or you could just buy a married put, you know, just something to that if the market were to terminate its upside, you have some mechanism in there that would, you know, give you parameters on your equity. It would give you an upside potential and a downside floor.
Yeah, I think people should get in contact with you for that. This is the option professor. He's the master at it.
Well, yeah, I mean, you know, that's the idea is hedging is, you know, you either are going to put an upside ceiling and a downside floor, or you're going to put at least a downside floor on it. And when you're at these kind of level, or you're going to replace an investment that is very large with a limited risk strategy that still gives you upside potential, but it reduces the cash risk you have on the table at the time. So there are a bunch of different ways to go. And obviously not one way is right for everybody, you know?
Mm-hmm.
But, you know, the other area, we looked at grain and we looked at energy. Now the third amigo is metals. Let's take a look at, you know, your gold, silver, and copper and see if you see anything that looks suspicious there.
All righty, let's put gold in first. Right, there you go, another sideways. Now, I've been saying from way back in here in the center of the chart, I've been saying we were going to see gold at 2,000 in my Sunday night newsletter.
Mm-hmm.
And I had so many people say, no, I was wrong. Gold was never coming back. That's not going to happen. It's just going to peter out right along this. What is that, an 1,800. That's never going higher than that. And look at that. It went to 2,000 and beyond.
Yep.
Now, of course, it's dropped back and it's
Yeah.
on a flat DMA. It's in congestion.
Right.
I
Yeah,
still
this
could
is
think it's
the
going higher.
this is the neighborhood of trying to keep it above. But even if it broke 1,900, it looks like it's got some areas down at 1,875 that could hold it up.
Yeah. Well, let's put a horizontal line on there. Right there's where that support is.
Yep. So, the way the market sometimes does it is, they peek through numbers, get everybody going one way, and then they take it the other way,
Mhm.
But
this
right
one is
now,
more interesting, I think, on a weekly chart because you
Yeah.
can see where it's been.
yeah,
And so it's been up in this, what is that, 2,100 price
Yeah.
area as
yeah,
recently
ballpark.
as
Yep.
recently as 2020.
Yeah.
I think we're still going there.
Yeah. Hey, listen, we have the interest rates extremely low and we have the inflation very high. And that has generally been a very, very good environment for the gold. Having said that, you ask yourself, well, why isn't it already at these other numbers of 21 and 2,200? And that's really the thing that's confusing a bit. But sometimes gold just does weird things and then it makes its move all in one time, right?
I think it isn't there yet because people haven't caught on to the speculation frenzy that's likely to start.
Yeah. Because it is, some people believe it's undervalued and underinvested.
Mm-hmm. I do.
With regards to the, now let's look at a gold stock, NEM, which is the Newmont Mining,
Newmont
kind of a
Mining. Oops, I typed
Cadillac.
the wrong symbol. Well, see, they think higher prices are coming.
Mm-hmm. Yeah, they're not breaking it very well, are they?
Nope. They're hanging. When price hangs out here between the upper outer and the upper inner band and doesn't penetrate that upper inner band, it's going up. It's going on up.
Let's take a look at the silver.
Okay. What's silver?
Let's look at SIL because that's a ETF of a whole bunch of them.
All right.
Oh, you can't do an ETF on this one?
Yeah, sure.
Okay, sure.
I don't have much interest in silver, never have.
Yeah.
Really. I mean, I used to have bags and bags of junk silver, the dimes and
Yeah, 90
quarters.
percenters. Yeah.
Yeah. And I've held on to
Mercury
them, but
dimes, a bag of Mercury dimes, right?
yeah, that's what I have. But they're just heavy bags. They're not
Yeah.
they're not exciting. And and look at that price. Look at what's happened here.
Yeah.
And it's got a channel going on there.
There used to be a deal of looking at the gold to silver ratio. We're at about 19, let's call it 50 on the gold. And what are we at? About 25 on the silver.
2,035.
Yeah, it got to over 100. It got to over 100 and now it's at 78. So it's still on the upper levels, but not as extreme as it got when it went over 100.
Yeah. Yeah, silver doesn't look exciting. I think the metals that are used in cars now are the ones that we should watch. Copper is one of
copper's HG.
Let's spread this back out again. Oops, that's too much. And we've got again, attractors at this level, right? A little bit down there. Oops, I didn't want that one. That's not real exciting.
No, it seems like it's stuck right around the $5 area. What about your Freeport McMoran, which is had a tremendous run?
What's the symbol?
FCX, Frank Charlie X-ray.
Yeah, that's nice.
But again, it's up near the upper end and a pullback towards 48, but that's not very much. It's almost there now.
Support is there.
Yeah.
Support is, but the DMA, see, we got gold on top. It's been going up again today, a red bar. I think it's going to come down to the midline, which is at 47 something change. I can't read that let's see, let's move it over. 47.81 is where the midline is. That's probably where it's going next.
And then if it can hold, if it could hold its muster, maybe go on another run.
And it'll go on another one.
And what about the industrial metals? There's 3 of them that have done very well.
Platinum, palladium, and
well, I was just thinking more like nickel and iron and steel, and the 3 stocks that are in that.
What's the symbol for nickel?
Well, I'm just going to give you 3 stocks that are in that business.
Oh, okay.
Cleveland Cliffs is CLF.
No, CLF
sign out
right?
of there. Yeah, but you got to get that
I
sign
got
out
the at sign out of there. That's for futures. Oh, that's exciting. 1, 2, 3, little tiny 4 and 5.
So now it should have a 1, 2, 3 down.
ABC, yep.
And where draw the line of support.
But there's no telling how high that's going to go. I mean, that 5 could become an extended 5 easily.
Okay. Because if you stretch that out into a say a 10-year graph or something, you can see that it has in history been quite a bit higher, or 20-year graph.
Let's do a 20-year graph. Oh yeah. Oh my goodness. That's really interesting. We had a great big run up and a collapse, and a great big run up and another collapse. And what? Tell me about this stock.
Well, these guys are in industrial type metals, so they're the metals that I don't know them all, but they'd be steel and iron and coal, maybe some cobalt or something like that. Different types of metals.
Boy, this one looks like it's nothing compared to what it was.
Yeah.
This big run up that we looked at on the different scaling.
Yeah.
Looks like nothing.
Right.
Huh.
And another 2 of them. One is called U.S. Steel X, and that's been doing really well. And if you look at it on a long-term basis, it also has a tremendous amount of real estate above if it ever got going.
Amazing. That makes it just look sideways.
Yeah.
Currently,
But currently, you can see in the last year, it's had quite a time of it. Yeah.
Huh.
But again, they both, like you say, it's either in a 5 that could explode further, but maybe the odds are it's going to come back towards the mean a little bit.
This one could explode further. If you look at this for a second, it looks like 1 little bitty 2, a 3 with a 1, 2, 3, 4, 5 of a 3. We've got a little correction coming and an explosion on up higher.
That seems to be what consensus is. And then there's this one out of Brazil, I think, VALE. That
V as in Victor?
Yeah, VALE, Vale. This is another one, if you look at the longer run of it, has had quite a bit of further upside in its past.
Interesting how it runs up so high and then collapses.
Yeah, well, I think it's like all these commodities, we go from shortages to surplus. That's why, on these agricultural things, people think, or on energy where we're up here, the world is round, after no supply, for whatever reason, comes supply.
That's true. That's certainly the way it is in the real estate market usually.
Yeah.
I've been a longtime California resident, and, you get all these developers look at the price of houses and the unavailability of houses out here, and they go crazy building houses, and then we have too many houses.
Yeah.
And that hasn't happened yet, but I think it will.
Right. So anyway, we give a little idea there on the metal area, and a little area on the grain, and a little bit on the energy. The energy and the grain, they look like they could have a little bit of a dip. On the metals. They're really, kind of in a more stable area on the gold, right around that 1900 neighborhood. And I guess the key is going to be is
Silver wants to know, what about palladium and platinum? What are their symbols?
Platinum is PLJ maybe for April. There you go. Yeah, platinum, is 10 times rarer than gold, but you'd never know it by the price,
No, you wouldn't. And they use it in Well, they use that in catalytic converters.
Yeah. And
Yeah. And people out here are breaking into the underside of your car and stealing catalytic converters now.
yeah, yeah. But it seems to be having a hard time with this 1100 area. I think if it goes to 1300, it could probably, get accelerating up to 1800 or 2000. If it can't get up there, then there's something wrong, and who knows what it would do. But it does seem like it hasn't moved yet.
Well, it looks to me like that's got further on the downside, which defies logic, defies the fundamentals. To me.
Yeah. I'm just going to look at what I got here on it real quick. Platinum for April. Yeah, we got it at 991, and lately it's been doing badly. Today it's doing badly, and frankly, it looks like it needs to get above 1060 to get going. So above 1060 would be a nice thing to see.
Right there's the attractor for that one. See how it hits price and price and price again.
Even getting back above 1033 would be a positive. But right now it's definitely on the defensive, huh?
It definitely is, and I think that we've got room on the downside for that one.
Yeah. But again, it's a momentum type thing. So above 1033, 1050 would be a positive. There's a big gap there. And then above 1150 would be a positive. So those would be two lines in the sand that I'd be kind of looking at, about 1040 and 1150. So I don't know that I'd catch the falling knife here.
Now, why don't you give me a symbol for a semiconductor?
What about a UMC? That's a smaller one. It's a microelectronic company, but it had a big run.
Lots of gaps in the chart. And trading at $9.
The big ones, obviously, the big ones are going to be NVIDIA, NVDA, which gave you a great opportunity at 215.
It did. Well, and look back here where this is where the DMAH says long.
Yeah.
Right. And we go through a little.
Yeah. Your sunny band's caught the bottom of it.
Yeah. Oh, yeah. Here and here and here. And there we are up.
Yeah.
And where's the attractor on this one? Let's see. Preponderance of price. Yeah, it's going up.
I mean, listen, if they have any belief in semiconductors, this is the horse they're going to ride.
Yeah.
Because they're involved, their products are involved in all types of businesses. So their customer base is very wide.
Are they making enough chips for Tesla?
I think they're making a lot of chips for a lot of people. What about AMD? That's the second horse in the race. And then 10 we can look at Taiwan Semi. And this is another one, Semi? TSM.
You know what they're doing is they're gearing up for more production. And they're encountering production costs and factory building costs. There's the attractor on that, right where we are right now. Yeah. So you would think that when we have a shortage of semiconductors, this would be higher.
Of course, these guys have the situation where they don't know what China's going to do to them.
Well, that's true.
The other one that's out there in this kind of industry, Qualcomm, QCOM. They used to be headquartered down in your neighborhood.
They still are.
Oh, okay.
Yeah, they're just down the street from me. Well,
so it looks like Taiwan Semi and Qualcomm look like they're in a reasonable area if you want to take a shot, huh?
Yeah, look at that. That just hit the attractor on the bottom there.
Yeah.
Come up. Purple's on top, so I wouldn't touch it until it passes this DMA line.
Yeah, right.
I love Qualcomm. I do love Qualcomm, but they got to go up a little higher before I'm a buyer of Qualcomm again. I've been in and out of Qualcomm dozens of times.
What about INTC, which is your Intel? That one started to get some boat legs. I don't know if it still has them.
A little bit.
Yep.
A little bit. We'll put another horizontal line out here. Got one there. We've got one here. Now, I'm always looking on the left side of the chart when I draw these lines. I don't look at what's out to the right. I'm just looking to the left. So those are the attractors that we've got. It broke off of that one nicely. So it's going to go up to this one at 5308.
Yeah. It's one of the better looking ones, huh?
I would say so.
And what about in the
But I do love
financials?
Qualcomm.
Yeah, people love the financials in a higher interest rate environment. Let's see if JP Morgan has hit a low and is it's on its way back up. JPM?
No, no, it's not.
Not really.
You would think that with interest rates growing up, they're finally going to make some money on their interest.
Right.
You know, for years now, they haven't had any money-making opportunities interest-wise.
Right.
And you would think that that would go up based on interest rates. I would think that.
Yeah. So the financials are not really on the road too much just yet, huh?
No, and I think the financials are going to have some problems as we, I think houses are going to have a turnaround.
Yeah, I think the boring stuff actually has some of the best charts. Put up like XLU, which is the utility index. That's what I've been saying to people, and that's what I think has been the place to park.
That's a nice one.
You know, and the other one up there would be the Staples XPU. No, XLP. XLP. That's your staples, you know, your boring stuff. No, they're not doing too much.
No.
How about your
like
dividend?
that. What was the one we just had up?
That was utilities.
What was the symbol again?
XLU, XLU.
Yeah, I wrote that down.
Well, people got to pay, you know, people got to pay. The other one that really looks, has been looking good is dividends, SPYD, SPYD. Those have been the two best places for parking is utilities and dividends.
Let's see, we've got this going on right here. Got to break that out. If it breaks out above that, then we're going to have some serious moving going on.
Yeah. Well, people like to get paid, you know, on their money sometimes, and things that pay dividends like utilities and these dividend stocks, you know, and some of them are in energy. So that's why it's probably not doing so good today, because the energy dividend payers are probably getting whacked pretty good. So, but yeah, the semis are now. What about Apple? Because they say they're shut down half of Shanghai, and supposedly they're announcing that their supplies are going to be pinched or something. But
Apple and Tesla are having Shanghai problems, both of them.
Yeah.
You know, Shanghai is the busiest, most populated city I have ever been in. They run 3 shifts of workers. So they work 8 hours in the morning, 8 hours in the evening, 8 hours overnight, so they can keep all their employees employed.
Yeah.
And there's no dark because they keep the lights on all the time. There's 3 shifts of people running around the city.
Now there's some interest in the crypto, and GBTC is for Bitcoin, and the other one's Ethereum we can get to. My feeling on this was that you had a great low in January that you could take your shot at and just put stops underneath the lows and let it ride. And that's been a pretty good idea so far. So, you know, it looks like it's trying to go someplace. What do you think?
Well, I think cryptos are going to go much higher. Long run, you know, short run, this is kind of congested. Like I said, I trade Ethereum. Yeah,
we'll get that in a second. But on this, it looks like as long as it stays above about $28, it looks like it's in pretty good shape, right?
We're going to go up to 35 there. Because see this line back here?
Yep.
Price here and price back here and price over here.
Yeah.
We're going to go up to 35, and then we might stumble just a little bit. And then we'll probably go on up to this line right here.
Yeah.
Which is at what? 42 probably.
Which is about a 50% throwback from the drop, huh?
Yeah.
And then we'd have to see what it's made of.
Yeah.
What about Ethereum? Ethereum, like I said, I just went to Jamaica, and when I go to the exchange rate, it was 1,500 to 1. And that's the only thing that said to me is now I know why digital exists, because these countries that have currencies that are very challenged, a digital currency would be very much probably of interest to them. But Ethereum,
there's Ethereum.
yeah. What about ETHE, which is the ETF on that one? ETHE. There you go.
Same picture as the other chart.
Yeah.
Well, it's recovering today.
Yeah.
This
Same thing
one's
as I
only up.
said, though, in January, you had a low point, and if you wanted to take a shot down there, it was right against your bands. It was a relatively
Right
low
there.
risk entry after it stopped making new lows.
Well, you see how it gets up to the inner band,
Mhm.
upper inner band, and it pauses. When it doesn't go above that upper inner band, I know it's going back down.
Yeah, right.
So there it goes down, touches the sunny band again. Here it comes up to the DMA, still weak, goes back down again,
Yep.
bounces again, and price tells me to stay with it this time.
So they do look like they've made a bit of a turn. I mean, it looks like they may have some resistance dead ahead, but overall, it does look like the lows that we've seen, may hold up for a while, huh?
I think so.
Yeah.
Let's draw a horizontal line real quickly right there. It's above that line. So that's interesting. We've got a little gap on that. So that could test this line and then go on up.
What about MU, which is Micron Technology? Somebody out there wanted to take a look at that. I think they're in data storage rather than the other stuff, though, aren't they?
I don't know, Micron. You're the one that knows all the.
Yeah, well,
symbols and all
I'm
the-
familiar with them to the point where I think that's what they do. They're certainly not the same as a semi, I don't think, because they don't have the same kind of oomph on it as, but they do follow them kind of.
Yeah, memory and storage and
Right.
flash devices and
Right.
that sort of
Although
thing.
the chart looks very similar to Taiwan Semi and the other one we mentioned.
ABC. Look, ABC coming down, big ones.
Yeah.
We should have a 1, 2, 3, 4, 5 coming up.
Yeah.
Got a gap right there as it comes up. So 1, 2, we should have a 3 that comes right up to in here. So 86 from 78. That's not bad.
Yeah, 3 of them that looked like they were in the lower echelon, I think, was AMD, Taiwan Semi, and Micron. They seemed like they were still near the lower end, and maybe have potential to have a pop,
Yeah, I agree.
So let me see here.
Silver wants to look at bonds. We'll look at that. Did we look at? We looked at treasuries, not the bonds.
Well, you can use TLT as a proxy. TLT.
Well, there's the bond futures right there.
Okay, but I don't know how many people trade that. TLT
okay, let's
is
look at TLT.
Yeah, that trades on the New York Stock Exchange.
Same picture. It's just a lot thinner, but same story. It's just going down. The more interest rates go up, the more that's going to go down.
Yeah. So you think it would be that's a classic catch a falling knife at this point?
Yes.
Yeah.
Or on the futures contract, a great short position.
Yeah.
Let's look at the futures just for a second. We got the short signal here.
Yeah.
And then we got a long signal right in there, which didn't ever get triggered because the price didn't react well enough. Here we've got another long signal, which goes up to the outer band. And then we turn, get another short signal and right back down again. So this
the fact that it's so far away from the upper band is not enough for you to be interested, huh?
Well, when it doesn't hit that upper band right up here.
I'm talking about where it is now. Where it is now,
I'm not interested. If I wasn't already short with that signal, I don't go short now.
And stepping in front of it, you think is just a little too,
a little too risky.
Yeah. Because if the only thing good you can say about something is it's far away from the upper band, that's not too much of an endorsement.
Well, it plays off of the extreme bands. So the upper outer band and the lower outer band are where I get my readings. So with it going on with this lower outer band right now, it's between the two bands. See, it's the lower outer and the lower inner.
Right.
As long as it stays there, it's still going down.
Gotcha. So there's no evidence of a turn of any type.
No, definitely not.
All right, well, we're in the last 5 minutes, which I think is important for you to refocus us on what you're doing down at the company and how people that are listening could increase their awareness of what's going on down there and what they'd benefit from.
Well, most of what I do for people is free. So I have, my website is moneymentor.com, and I've got everything I know there. And my email address is sunny@moneymentor.com. And I offer a free technical analysis forum that starts next week, 4 sessions, 4 weeks. I've got a free Sunny Side of the Street newsletter that comes out every Sunday night. I've got a free podcast called The Sunny Harris Show. What else do I have that's free? Free live trading room every Tuesday morning at 7 a.m. California time.
So you have, you have you got a lot of ways to get started,
yeah,
and then move on from
and
there.
then of course, if you want Sunny bands, then that costs.
Right.
But you can buy those right on moneymentor.com.
Okay.
And the caveat to my live trading room is you have to turn on your camera and your audio so I can interact with you. You only get what you put out of it. If you don't ask questions and give me feedback, then like I told my first editor who wanted me to write Trading 101, which was my first book many years ago. I said, I can't write.
Right.
She said, write something. I said, well, I trade. That's it. That's all I could say.
Yeah.
And then I ended up writing the book anyway.
Yeah. Well, you get so much knowledge accumulated over time, you feel like you want to share it,
Yeah. Well, and then I have my latest book. My 7th book now is coming out probably the first part of May. And this one's called Easy Language, Object-Oriented Programming Made Easy. So it's for people who want to really program in the guts of TradeStation. It's 1,250 pages so far.
That's pretty good.
Yeah.
Hey, I just wanted to hit 2 more spots on something that people asked about that we didn't hit, and we got a minute or 2 here.
Sure.
One was on lithium, and the stock I would focus on is LAC. Let's put that one up for people that are interested in lithium.
That one looks nice to me. I like that one. I don't know why exactly, but right there's the attractor. So it just bounced away from it.
Right.
But I think that's gonna 1, 2, 3, 4, 5, 1. I think that's gonna explode on through there.
And the other thing
you see over here, the DMAH, sorry to interrupt.
I was going to say,
right there.
The gold is just showing up at the bottom. Yeah, it's just showing up.
But when it turns green on the vertical histogram, that's when I go long.
Okay. Okay. And the other one is in natural gas, and RRC. I've noticed is a fairly attractive one.
Oh yeah, that's nice.
So for those type of things, they both look like they could pull back and be bouncy, but the momentum on them, you'd have to say, looks pretty good.
I would say that looks like it can go further up.
Yeah. All right, let's put if we could, David, put up the contact email and stuff for Sunny, and make sure people know how to get a hold of her. Obviously, I've been in this thing for a long time, and I find this very helpful. So if those would like to reach out to her, there's her email right there, and moneymentor.com.
Right. Thank you.
Okay. And as far as Option Professor is concerned, we have a PDF report that we have on hedging, which we just talked about in the energy markets, hedging downside risk, but we also have hedging upside surprises, which many people have received in the last 2 or 3 weeks with this rally. So there are ways of hedging against being surprised on the upside, and also to protect your values from a decline. And Option Professor has a special report. If you'd like to get that, go to optionprofessor.com, put your information in, and we'll get that over to you.
And I'm really enjoying your newsletter, by the way.
Oh, I appreciate that. We try to do a good job on that, and try to give a very independent, view on things, because we don't have axes to grind. We don't have to be bullish. We don't have to be bearish. So we try to call it as we see it.
You do a good job.
Thanks a lot, Sonny. Appreciate that. And we'll talk again. We'll have one of these sessions again. I always have fun with it. And David, I'm going to throw it back over to you.
All right, thanks. Yeah, covered a lot of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research at YouTube and your favorite podcast app. Also, you can just go to TimingResearch.com to get access to the recording of this show as soon as I can get it posted. Also, any of the past shows and events are always there to review whenever you want. And just want to thank my guests again for today, Sonny Harris of MoneyMentor.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you, David.